Hello, my name is Andrew Peng. Welcome to another edition of CMS Forex News. Today is Thursday, September 4th, 2008. The ECB kept interest rates at 4.25% in a bid to fight inflation, even as the euro region teeters on the brink of recession. Policy members continue to be concerned about wage inflation, and with weak activity in the eurozone, the ECB does not seem likely to raise rates soon. The Bank of England kept rates steady at 5% after concluding their meeting today. Despite all kinds of signs of an economy reeling in 2008, the bank is on guard against high inflation, which has not come down to a sufficient level for it to cut rates. In other news from Europe, Germany's factory orders fell 1.7% in July for the 8th straight monthly decline. Domestic demand was weak, with domestic orders falling almost 3.6%. Foreign orders edged up slightly. In the UK, the HBOS house price index declined 1.8% in August, matching forecasts. The pace of price declines has eased a bit since March and May, when prices were falling 2.5%. However, on the year, prices are now down 10.9%. The euro-pound pair fell overnight from a record high it set earlier in the session and extended its gains after the two central bank decisions. In the U.S., jobless claims rose to 440,000, surprising forecasts on the upside. That elevated level is consistent with the shrinking labor market and weighed on sentiments. The ADP employment change report showed the economy shedding 33,000 private sector jobs in August, and July's positive figure was revised down. In a third release regarding employment, productivity in the U.S. jumped by 4.3% in the second quarter, higher than expectations, while labor costs fell 0.5%. The data means that so far the U.S. has controlled wage inflation. With wages kept in check, the U.S. can avoid a wage price spiral, and the Fed has more time to be patient and hold interest rates steady longer. A final report from the U.S., the ISM non-manufacturing index rose to 50.6, surprising forecasts on the upside. That puts the services sector back in expansion after 2 months of declines and helped boost the dollar after its release. The euro-dollar pair, which had been moving higher overnight, hit resistance at 1.4540. In the aftermath of the ECB decision, the pair declined a little, but was seriously pushed lower following the better-than-expected U.S. services report. By 1 p.m. Eastern, the pair was about 170 pips off its intraday high. Though the dollar improved on the euro and the pound, a nosedive by U.S. stocks today increased risk aversion and helped drive the yen higher against its rivals. The Dow Jones Index was 250 points lower in the morning trading as leading retailers gave lukewarm sales news, and the jobs data means the economy will continue to be pressured. The dollar-yen pair was more than 100 pips off its intraday high and put the pair at its lowest since August 1st. The negative mood spread to other pairs that more closely follow equities. The Euro-Franc pair, which didn't decline in the wake of the ECB decision, slid 130 pips in New York trading. The sharp drop was in contrast to the more gradual declines seen in the past 3 sessions. Other carry trade pairs shared a similar fate. In Australia, the trade balance showed a deficit of 700 million Australian dollars, which undershot expectations. Imports were up 4%, with fuel imports surging, while exports decreased 0.1%. That undercuts part of the RBA's message, and although domestic demand is weak, trade would help support the economy. Still, the data may be an outlier, as there were some technical issues, like an explosion in Western Australia that curtailed exports and sent oil prices skyrocketing to a record high in July. The Aussie-US dollar fell to 0.83 following the release, but recovered overnight. However, with carry trade sentiments falling and the greenback strengthening by its ISM report, the Aussie slid about 100 pips following the New York Open. Tonight, Australia releases its construction PMI, and Japan posts figures on capital spending for the second quarter. Overnight, Germany releases its industrial production data. Tomorrow, Canada and the U.S. release their employment figures, with the U.S. non-farm payroll data expected to show another big decline. Canada finishes the week off with its IV PMI. And that wraps it up for the day in Forex News. Join us again tomorrow right here at cmsfx.com. Until next time, happy trading.